This morning, we got the Empire State Manufacturing Index, which came in a little better than expected. And this is maybe ending the losing streak that has been U.S. economic data recently. Not necessarily the best number in the world, but at least better than expected. Still some contraction in manufacturing index. This, of course, tracks the manufacturing, kind of purchasing managers. It's specific to New York, which is a powerful indicator by itself. So a little bit better than expected news. And let's have a look at what the markets are doing in response to it here this morning. If you take a look at the dollar index is on the daily chart, seeming like it wants to break out here. A little bit of a strength to the upside, breaking through that 105.2 level. And, this is at least off to a good start from a price action perspective. But what's a little concerning to me is you are still getting some long wicks across the top. And, maybe that's off the back of last week's cooler than anticipated inflation data. So inflation data has been cooling, and we're going to be getting into some economic data in just a moment. From a technical perspective, however, we do see at least a nice start to the upside, a big break here. And let's see how price, if it does pull back, how it reacts to this 105.2 level. And if we can actually make a stab at pushing higher. Part of the reason for this dollar strength is arguably because of the other central banks of the world, like the Euro, the European Central Bank and the Bank of England, looking poised to rate cut further this year. The ECB and the Bank of Canada have already started their rate cuts. So from a currency war perspective, the dollar looks a little bit strong when only one rate cut is now expected for the central bank here in the US, the Federal Reserve. We saw that this past week from their dot plot that they released, showing, again, one rate cut is what they forecast for. So making the dollar look a little bit strong simply by being the slower one to the rate cut race. Now, before we continue with the video, I do want to call your attention to the huge, biggest sale of the year that we are doing currently for VIP memberships. If you've been watching the channel recently, you've been seeing me trade things like gold and, TLT and the indices and currency pairs. I trade a little bit of everything, but inside of our VIP group, we are currently offering 50% off of any of our memberships. Whether you're looking at the 1-month membership, the yearly membership, or the gold membership, our prices are at the lowest that they will be all year long. So if you've been thinking about getting into the VIP Discord, now is your chance. Here's how you can get access to not just 50%, but check this out. For viewers right now, people who are watching my YouTube video, we'll actually give you 55. Here's the secret way to do it. The first link down below in the description will connect you to a representative on my staff who can set you up with the biggest discount of the year. That is 55% off the VIP memberships. Come see all the trades that we're taking, join in the coaching webinars, join the chat rooms, get access to our trading strategies, and so much more. If you're a serious trader looking to learn, this is the spot to be in. So again, take advantage, get access to the signals, and so much more. First link in the description will actually get you 55% off of the VIP group. So check it out. So next up, we'll take a look at the S&P 500, which has started to pull back here a little bit. We are seeing, perhaps some early signs of a slowdown in this recent rip to the high side. I am still bullish on the indices, but I think a technical pullback is very, very much due. Again, I'm not shorting this market, but I have sold calls against my current positions. As you can see, I am long VOO, which is the S&P 500, and XLK as of the dips that we saw in April. But I've chosen to also sell calls against my position, which are not starting out great. But if we do start to see over the next few weeks, the markets start to really pull back, I'll be really glad that I sold these calls. If the market keeps ripping, then I have capped my upside and I will take losses on the calls that I've sold, but I've got gains in the underlying position that I hold. So I'm kind of hedged to a degree. But if this market continues to roll over, or starts to roll over, I should say, it has not really rolled over at all. If we start to see more of a pullback here on the indices, I'm very interested in keeping an eye on this one for possible pullbacks, if we do start to see them. But in the short term, I think the market is a little bit tapped out in terms of gains. Same thing for the NASDAQ, though this thing has been so on fire. And there's a couple reasons for this. I'll keep it really brief here, but market breadth, which is, again, the participation of all the different companies in the stock market, has been really poor recently. And we can take just a quick side journey here to talk about that. If we take a look at semiconductors, the NVIDIA story, and AMD and Qualcomm and all these, semiconductors, the chip companies are doing phenomenal. but everything else is not doing that well. You have technology and you have semis that are doing amazing. But then you have things like, again, the consumer discretionary stocks. These are things like Nike and Tesla, not doing so hot. And then you have, real estate, which has done really poor. You have industrials doing terrible, utilities not doing so hot, energy doing poorly. Healthcare is flat. So my point was showing you that really quick for the index traders is that you want to understand your sectors, and you want to understand that right now it is thin leadership that is pushing the markets higher. And that is a cause for concern. We're not seeing all stocks doing well. We're seeing a very small portion of the stock market doing well. And that is an area of concern for me personally with the indices. So I do think that, you want to see the other market participants, the stocks that are, not doing really well. You want to see them pick up and do well also. So I think that, you get a pullback potentially, and I'll watch for that myself. You have the VIX at very, very low levels. Any sort of pop in the VIX could really get the stock market to sell off. So, be very cautious. It is not out of the question that we could see, this really start to pull back. While we're on the topic of the indices for just a second, I wanted to show you something really important. This is the AAII Investor Sentiment Survey. It asks market participants a very simple question. Are you bullish, neutral, or bearish on the stock market? And right now, what we can see here is that the stock market bearishness is very low at just 25.7% of participation saying they're bearish. 44.6 plus 29.7 say they are neutral or bullish, respectively. And so again, what you can see here is that the market is very confident in terms of sentiment. And it doesn't mean that, this is an immediate contrarian signal, but I do start to get a little bit nervous when I see market participation sounding incredibly bullish and everyone is just pumping money into Nvidia. It can take some time, but eventually those usually end with corrections or even, sell-offs that turn into a bear market. So be very careful when you're watching the stock market right now to not get too caught up in the hype. That's my personal opinion over the years that I've been trading the stock market. Again, it does tend to go up over time, but it can get real nasty when everybody gets parked into the same thesis of the market's just going to keep going higher and higher and higher. So be very careful out there if you're watching the indices right now. That would be my opinion. I am still long gold, so I'm keeping an eye on this one here. As long as we hold support, this is my thought process on the gold market. We are at a supportive level here. If we break through this 2,300 level on the price of gold, I'm going to call it quits on this. But let me back up and talk a little bit about this economic data that I mentioned earlier in the video, because while this level of support is nice, this support level by itself is not why I'm taking the trade. Why I'm putting money on the line is because I like the data. And if we take a look at, again, from a contrarian standpoint on the AAII Investor Sentiment Survey, that's one side of things. While, everybody's getting really bullish on stocks, I get a little nervous. I want to start looking at other places. I like the gold story, but I also like the gold story because I'm seeing some data like the job openings data. We've talked about this in recent videos, trending lower. Economic data in the labor department is a little concerning. You see unemployment starting to trend up. These are things that I like more on the gold side of things. Unemployment claims have also been trending up recently. We've seen some higher than anticipated in the latest claims. We'll get more of that on Thursday. You got wage growth kind of slowly, wobbly lower. But what this points to me is that the labor market is starting to show signs of slowdown. And that slowdown could lead to acceleration of slowdown, meaning perhaps even a recession. And especially if we don't see inflation data coming down soon. Remember, people have been sharing cooling inflation data, but here's my concern with it. Look at the USD over this period of time, or the US inflation graph. It's pretty dang flat if you're taking a look at the blue line. Why is that concerning? Well, the labor market is trending lower and inflation data is trending sideways. That's scary because now you have inflation that's still sticky, right? We have not seen, you can't cheer inflation progress yet, in my opinion, without also noting that we're seeing the jobs data come in light. So light jobs data plus sticky inflation could lead to some problems down the road. So in my opinion, that is why I continue to stay long gold. It's my favorite position in the account right now. And I could be very right about this, or I could be wrong. I'll tell you right now, and I talk about this often, I know what I will do if I am wrong. If I am wrong and we break the 2,300 level, I need to reset, close out the position. I'm gone. I'll wait for another setup. But from the fundamentals perspective, I very much like gold to the upside. and I'll continue to watch it. It is my current largest position in the portfolio. Speaking of the portfolio, as I mentioned, this is the positions, all positions that I currently have open on my account. If you don't already have WeBull, or you're interested in setting up a WeBull account, I want to take a moment just to let you know how you can do so. There's a link down below in the description to sign up with WeBull. And if you're not interested in WeBull, or you're outside of the US, but you still want a great brokerage to trade with, I've got several links down below in the description. And something unique about all of the brokers linked down below in the description is you can actually trade directly with all of them on tradingview.com. So if you're looking to trade directly on TradingView, which is an incredibly convenient thing, check out the links down below in the description for those brokerages. They're all regulated, and they all offer some special sign-up perks that you can find out more information about down there. So thank you very much for tuning into this video. I hope it was helpful to you, and have a great rest of your day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel, and we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.